I'm Howard Green. Well, if you can't beat them, join them. That seems to be the spirit of the deal between H&R Real Estate Investment Trust and Kingsit Capital. They were competing to buy Primaris Retail REIT, which owns shopping centres across Canada. The REIT was put into play in December after a hostile bid by Kingsit. H&R came into the picture with a bid in January, supported by Primaris. But as of today, the two bidders have joined forces, agreeing on a cash and equity deal valued at $2.83 billion that will see Primaris's properties split up. Primaris's tenants include many Canadian household names like the Bay, Canadian Tire, and 10 Zellers outlets that are being converted into Target stores. Here with his take on the latest and an outlook on the REIT sector is Frank Mayer, Chairman and Co-Portfolio Manager at Vision Capital Corporation. Thanks for coming in, Frank.
You're welcome.
So first of all, I mean, what do you think of this? Did you expect this kind of three-way deal?
With these things, you never know the way they're going to end up, but it is a logical conclusion, and it certainly is a favorable one for investors.
Do you think this is it?
If there were going to be another investor, it would have to be American, and I can't imagine why they wouldn't have already appeared on the scene. So I think that's it. This is it.
And the price is a fair price?
Well, let me put it this way. Before this all started, back in December, the average analyst on Bay Street was saying that Primaris was worth $24 a share. So today, the price is close to $28, depending on how you allocate the units that are being offered and the cash. So clearly, from that perspective, it is more than a fair offer. Either that or all the analysts were wrong.
We see the price there now. It's trading a little below what the offer is. Is that significant information?
No, I think that's normal. You know, the seller, many of the people that own the shares already are taking their profits, and the people who are buying, in order to have an incentive, need to have some discount to what they will receive.
What about, actually, before we move on with more questions, let's roll a clip, because we had the CEOs of all three parties on the channel earlier today. This is a clip from John Morrison, the CEO of Primaris.
It's a superior proposal to what was presented earlier in terms of the deal directly with H&R. There's more cash available. There's 45% more cash available. The exchange ratio on H&R units is now higher. And it allows them to stay invested in the enclosed mall asset class, so that continues. And the tax rollover advantage is still there for unit holders as well.
What do you think about what Mr. Morrison said?
Absolutely correct. All those factors are there. The number of units being offered has increased 3%. The cash has increased by approximately $700 million. The net result is the offer has increased effectively by 50 to 60 cents a share or unit.
What about the so-called cap rate, which is watched so closely in real estate? They're saying 5.6%. Put that in perspective historically, and whether that makes this worth it.
Well, let me put it another way. I mentioned earlier the $24 average net asset value in December by the analysts. That basically incorporated a cap rate of around 6%. So this one is actually around 5.3 or 4 if you average in the two parties, the two players. So it is considerably higher than was, and I'm sorry, the cap rate is considerably lower, which means higher priced than was previously the case. And in a historical context, this cap rate is probably close to a record high, if not a record high, for these type of properties.
And so how much more of this can we expect, given where cap rates are?
Well, you know, interest rates remain low. There's lots of credit available. There's a shortage of good properties, as evidenced by the bidding war for Primaris. I think there's more to come.
More to come. So it's really got to do with the spread then between the cap rate and what the rates are, the long rates are?
It has to do with several factors. The portfolios of properties aren't as readily available as many players would like, and many of them can find them in publicly traded companies. And that's so that's one attraction. The other thing is that the share prices or unit prices of the publicly traded vehicles are too low, as evidenced by Primaris trading well below this ultimate takeover offer, which has a price tag of approximately $28 on it.
So then where should we expect the next round of action?
It's funny, we had a meeting with a Bay Street analyst this morning, and they pointed to Canadian Real Estate Investment Trust and to Killam as potential takeover vehicles. But you never know. Many analysts do not pay attention to many of the smaller or less liquid names, and the takeover activity could be there. In our portfolio, which is real estate focused, we've had 6 takeovers in the last year and a half.
6 in the last year and a half. And so this year, what do you think?
I think there'll be another. I think there'll be another couple of takeovers, and I'm hoping they'll be in our portfolio as well.
Are those 2 that you mentioned, those smaller names, are they in your portfolio? Killam and Cap REIT?
The Canadian Real Estate Investment Trust.
Sorry.
Is not a small entity. It is one of Canada's larger REITs. Killam is one of the smaller residential rental apartment REITs. But I'm not at liberty to mention whether they're in our portfolio.
You're not at liberty to mention. Why not?
Well, we have a policy of only disclosing those names that have been publicly disclosed to our investors. So I'd be pleased to talk about those if you wish.
All right. Well, what about RioCan in this, a player in this? Back to the deal of the day.
Well, certainly RioCan is a player in the deal. I mean, they've gotten a full interest in one of the properties and a 50% interest in another property, both of them being regional shopping centers in the Toronto area. And so, RioCan continues to build its presence in regional shopping centers in the Toronto area, but parenthetically, they're selling some enclosed malls in other cities. So they're trying to focus in, pursuant to their corporate policy, on Canada's major cities. But the move into regional shopping centers is a new one for RioCan as well.
Sorry, before we go, is this less than RioCan thought it was going to get in the original deal?
I believe so.
Yeah.
I believe so.
So do you think there'll be a player in some of those other deals that you were speculating on for the rest of the year?
Not necessarily, but
no?
Nobody will ignore them because they are the biggest and they can write a bigger check.
All right, we will leave it there. Frank, thanks a lot.
Thank you.
It's Frank Mayer, Chairman and Co-Portfolio Manager with Vision Capital Corp. Coming up next, Dell's founder is teaming up with a private equity firm to take the company private in what would be the biggest leveraged buyout since 2007. We'll get Barry Ritholtz's take on the deal after the break, and a little later, Andrew Palmer of The Economist with a primer on Mark Carney's first testimony before British lawmakers.